We have only bits and pieces of information, but what we know for certain is that at some point in the early 21st century, all of mankind was united in celebration. We marveled at our own magnificence as we gave birth to AI.
AI? You mean artificial intelligence?
A singular consciousness that spawned an entire race of machines.
Alrighty, good morning, everyone. So welcome to BAFT Orlando 2026. Hope you guys had a good morning rest, a good coffee, and ready for this schedule to begin. My name is Omar Farhangyar. I am with RBC Capital Markets. I'll do a quick introduction of the Agentic AI team. We'll be talking about its impact on transaction banking. So to my right, Pepita from StoneX, Patrick from PNC, Miriam from JP Morgan, Natalie from NatWest, and then Marvin from Credit Agricole. We also have a colleague who's going to be joining us video, and the reason she can make it is because she is bringing a human to this world, so no AI involved. And one other colleague, Gabriela Sarfini, she's from Bank of America. Unfortunately, she couldn't join us, but she was very involved with the paper as well. So with that being said, I will pass it to Helen.
So, what is Agentic AI? Agentic AI acts like a human being, which is highly autonomous in solving a complicated problem by leveraging large language model, and keeps improving the results with the loop of continuous reasoning and acting. And how is it different from traditional AI? Think about email spam filter or Siri Alexa you use daily. This traditional AI acts in a linear pattern, which answers to one prompt with a one-time snapshot response. Humans are embedded as a component, since the system heavily relies on humans' input for the next step. Agentic AI, such as OpenClaw, operates in a reasoning acting loop and solves complicated problems by decomposing reasoning, acting, and learning. The system can backtrack and improve dynamically based on the interim results. Humans are orchestrators instead of components that builds and oversees the Agentic AI ecosystem. Global banking invests $70 billion annually in AI technology today, and the number is still increasing. There are two types of Agentic AI, narrow agent and multi-domain agent. Narrow agents are specialists that focus on single topics such as KYC and payment investigation. Multi-domain agent creates holistic client profile and provide best practice suggestions across different business lines, which is mostly adopted by relationship managers and sales. In terms of strategy, financial institutions use a mix of build, buy, or partner, where most of the institutions today select the partner route to customize existing third-party vendors. But is the industry really ready? What do they trust and doubt the most? Let's have Pepita to review the industry response.
As part of this project, we surveyed over 50 professionals across transactional banking and fintechs globally to understand how the industry sees agentic AI, where we are today, and where we're heading to. Starting with AI maturity, as the graph tells the story, over 60% of the organizations are currently in development, 15% are fully established, Interestingly, not one respondent mentioned that they haven't started. The message is clear. Agentic AI is no longer a future ambition. It is happening across this industry while we speak. When we zoom into agentic AI, familiarity is evolving. While most respondents have heard the term, not many use it or fully understand it. Only 1 among 5 actively use it at work, which means awareness is high, but adoption is at early stages. What is encouraging is the sentiment. Nearly 80% believe that agentic AI will positively impact their day-to-day work. What are the user cases they trust? It's usually the simple operational scenarios such as KYC, onboarding, compliance, fraud detection, client servicing, payment investigations. These workflows were traditionally burdened with manual effort, so clearly stands out as immediate wins. However, with enthusiasm comes caution. 3/4 worry about loss of human accountability, while 70% have cited that data confidentiality and accuracy remains key risks. The message is simple. Adoption must go hand in hand with strong controls and governance. The themes remain consistent with interviews we conducted with experts. We brought these insights in our white paper to support you with your journey ahead. Patrick, would you like to share with us some of the user cases you've researched?
Thank you, Papita. Customer due diligence and KYC processes are some of the most important in banking and are required throughout the entire life cycle of the relationship. I think we can all in this room agree that KYC is some of the most operationally painful, but also systemically important aspects in transaction banking. Now, where can AI come in? A strong example here is where an AI agent can help with beneficial ownership mapping. So think of a large multinational company with 100+ subsidiaries. Once you start adding in shareholders and directors, the mapping of that process is a very time-intensive and resource-heavy process. What can the agent actually do? Now, when it comes to that, they can actually review all the documentation that's submitted and extract those key informations and populate forms and auto-calculate those ownership percentages. Specifically, it can also tap into internal resources, but also external systems. So think about a government registry to validate that the corporate information that's being provided is accurate as described. The key takeaway here, a faster onboarding process leads to quicker revenue realization. Now, alternatively, for ongoing monitoring and compliance, fraud detection, traditionally these systems are very static. So think about flagging a cash deposit over a certain dollar amount or an incoming wire from a high-risk jurisdiction. Where an AI agent can come in is to turn this model into more of a dynamic one, tapping into internal systems, looking at a customer's payment activity to make more informed decisions, turning the entire process from a more reactive monitoring system to a proactive one. Omar, can you tell us a little bit more about payments?
Yeah, definitely. Thanks, Patrick. So as we all know, transaction banking is the heartbeat of payments. Without the transfer of a fund, the end beneficiary will not receive it, and we as bank will be out of job. So one of the things that we focused in this paper was in terms of domestic payments and how agentic AI can help with that. So we're all familiar with formatting. Formatting is now getting resolved with MX, but we still have formattings within domestic payment. With reasons your wires are getting rejected, your checks are bouncing, or ACH rejection, duplicate payment. So all of this, an AI can help facilitate the workflow so that the end beneficiary is receiving their payment on time. Instead of your team members going in manually looking for information with different systems, an AI could trace that payment, give a response right away without you having to respond or wait for it. And then it comes down to international payment. I understand that the industry has gone to MX, and everybody thought that payments will flow a lot faster. Everybody will be getting their payments yesterday. Everybody is a lot used to Amazon services, so they want their payments to be the same. But what we found out that with MX payments, there's a lot of nuances. For example, there's different time zones. There is still a legacy internal bank system. So as you know, a lot of banks, they convert wires from MT to MX. So there's that adoption. Having an agentic AI will help you bridge that gap. An agent is there in the background, making all the translation, making all the connections with your payment so that the end beneficiary receives it. And then lastly, when it comes down to client servicing, we all know client is the reason we are in this business. We want to make sure that they're happy with their payment, they're not getting their time wasted. So if you have an agent 24/7, they're responding to the inquiries where right now it's manual, your business moves a lot faster. So an AI can help you with that. And that being said, I know in the industry there's a conversation going on that AI is going to replace humans, but we should all look at it from the aspect that AI is there to help make payments faster so that the sales agents can go and sell more. So now I'll pass it to Miriam.
So in liquidity management and treasury operations, Agentic AI can help to track positions for cash across multiple accounts in real time, identify surpluses and shortfalls, update forecasts as new data arrives, and it can also recommend or execute internal transfers, short-term borrowing, or investment moves to keep liquidity within target thresholds and avoid excess cash. This makes it useful for bank treasuries which handle high volume flows, cut-off times, and queues for payments decisions. So where does Agentic AI help the most? The biggest value tends to come from high-frequency, rule-based decisions that still require a human input. These decisions can be like intraday funding decisions, payments prioritization, cash concentration and sweeping, and exception handling for fraud and compliance triage. So for a transaction bank, this can translate into 1, better client liquidity visibility, 2, faster responses, and 3, a more scalable treasury operations. Natalie, would you like to tell us more about how Agentic AI can help in trade finance and deal origination?
Sure. So trade finance has historically lagged behind when it comes to technology. And while prom notes written on clay tablets is no longer the norm, some would argue that the industry hasn't changed all that much since. Think about every manual task when processing a trade instrument. Document checking, wording negotiation, checking limit availability. An AI agent can do all of this completely autonomously, and it works around the clock, 7 days a week, on multiple tasks at once. This can significantly reduce the time it takes to process trade instruments, meaning that higher volumes can be catered for, meaning smaller companies could access trade finance, and secondly, helping to streamline global trade overall. Capital efficiency. So while this area impacts other areas of banking as well, products like receivables finance, for example, can make capital efficiency particularly challenging due to the higher instances of lower utilisation throughout the cycle, followed by huge demand at quarter ends. However, an AI agent can help with this by 1, accurately forecasting limits based on historic patterns and current market conditions, and 2, by tracking utilisation constantly, matching limit allocation with utilisation. This helps to ensure that sufficient limits are available for clients to use when they need them, without requiring banks to hold huge limits that remain in place, largely unutilised, until peak times. Finally, deal discovery and execution. As an originator, time for proactive sales can be limited, but think about Agentic AI as your ideal origination co-pilot. Imagine every time your prospect releases their quarterly report, you get an analysis into their working capital position right now and product recommendations without lifting a finger. Imagine receiving alerts for local currency opportunities based on SWIFT data without any prompting. Agentic AI can do all of this and more, including the bid or no bid decision in RFPs or monitoring deal progress in general. Agentic AI can help originators be hyper-intentional in their actions and propose solutions based on the environment their clients are operating in real time. So those are our top use cases, but there are, of course, some considerations. Marvin, could you tell us more?
Thank you, guys, and I truly think you've been wonderful. So we've just seen some truly compelling use cases, from compliance monitoring to liquidity management to trade finance processing. And I believe the potential is real. And I want to take a moment to talk about what it takes actually to get there and what we should have in mind as an industry. As Pepita mentioned in our survey, most of the answers flag the loss of human accountability as a top concern. And right behind that, data confidentiality and accuracy. These are not irrational fears. It actually showcases the complex and very regulated environment we're working in, where mistakes can have huge consequences. And I believe Agentic AI is a tremendous tool, one of the most advanced we've seen in our industry so far. But it is just that, a tool. It will not replace the people in this room or even the relationship instinct that brings a banker to a client conversation. I believe if we deploy it correctly, it will free us from the repetitive, manual, and time-consuming tasks so that we can focus on the work that really requires human expertise. So how do we get this right? First, human oversight. Keep the human in the loop for high-risk decisions. Second, governance and regulation with a clear framework, not just with the regulators, but also from the banks. Banks must say what an AI can do and cannot do. Third, invest in new people, because this is not about workforce reduction, this is about workforce readiness. And fourth, it's actually what we're doing here at BAFT, bringing people, bankers, and future leaders together, meaning collaboration. That's what we need in our industry. To wrap up, I'm going to tell you something. Agentic AI, it's not coming, it's already here. The question is not whether to adopt it, but how to adopt it responsibly. Keep people in the loop, build governance before building at scale, and invest in new people. Thank you, guys. I hope you enjoy our presentation, and of course, you can join us on June the 2nd for our webinar to answer to all of your questions. And do not forget to read our white paper.